Welcome back to the Knowledgeable Podcast. This is part 2 of episode 13. Sorry I got interrupted. Um, but where I left off, again, where NVIDIA is, okay, and before I start that, anything I say in here is not financial advice, or anything I do is not for you to go out and do. This is just for entertainment purposes only, and I'm not a financial advisor. Thank you. Going back, NVIDIA is not worth 1.2 trillion, end of story. 1.1 trillion, end of story. Again, like I said before, it might be worth 300 billion to 500 billion. I'm not sure. Okay, I think it's worth more than 300 billion just because of the growth and what people see. But I'm gonna say with the 500 billion, I get why people are valuing it at $1 trillion. I get it. I totally understand. But it's not going to grow that much anymore from here. So why would you invest in it? I'm sorry. I don't get why you would put your money in something that may make you another $20. What is that percentage on that $400? Or $500. Let's say it goes, you bought it at 500 and it goes to 520. We'll say 526 just because, you probably won't get it exactly. You probably won't get it and sell it exactly at whatever. So we'll just say that. Okay, so that's where it's at. Well, 522, you sell that. Okay, so what now? What is that? Let's look at this margin here. Hold on, sorry. I'm gonna grab the calculator. Okay, so this is a calculator. Okay, so if you do 500, let's look at it. Or let's do, I don't know how to do this math, but we'll do 500 divided by 522. Okay, hold on. 522 divided by 500 is, okay, that didn't help. But according to this, here, I have a better solution. 500 times 0.10, so 10% would be 50, and if it was 5%, because half of 10% would be 5, that would be $25. So we're looking at like a 4% gain. No, I'm not saying that that's a bad gain, okay? I'm not saying that that's a bad gain for, your portfolio. Yeah, so exactly 4% would be $20. So I'm not saying that that's a bad gain, okay? What I'm saying is that the market, what I'm saying is that I think, again, if you're willing to make 4% and you're good with that, that's great. Go do that. I just don't, but then that's not really an investment, that's a trade, okay? And I'm not saying I'm totally an investor, okay? I'm more of a monthly trader, okay? So, my style of investing is totally different than yours, and it's not even investing, it's more monthly trading, figuring out things. I know someone that owns Disney, I know someone that owns Target, just like you probably know somebody, but where I manage some of their portfolio. Disney, Target, CVS, and you may say Disney. Listen, I hope Disney goes to 70 because I want to buy a whole lot more shares. I'm not willing to buy more shares at this price. I'm sorry, I'm just not. I hope it goes down to 80, 70 bucks. Target, I hope it goes down to 100, 110. Between there, I'm going to be buying more shares. CVS, if it goes back down to 65, I'm going to buy another share. Okay? And I own a little bit of PayPal. I do believe in PayPal. PayPal, I think that's more of a trade, not really an investment. Well, here's the problem with PayPal. PayPal is going to have competition. Okay, they're going to have competition with Apple. Right now, they have a whole lot of margin in this market, but Apple is going to cut in that margin, and other companies are too. Okay, so the reason why I would invest or trade, whatever. PayPal is more of a trade, not really an investment, okay? It can become an investment if it takes 10 years, but I'm willing to stay in that, okay? Because PayPal also could just become like a regular value company, which I kind of think right now it kind of could be, be considered. I don't know if it's going to go back up to 300. I don't think it could, because it's possible. I mean, there would have to be a lot. They would have to go in the technology space and other spaces and grow their customer base. So that's that. But going back to Nvidia, you know, I just listen. I see the $1 trillion market cap. I get it. You know, because in the next 5 years they could be getting to $100 billion in revenue, and you could say, oh well, you know, when Meta went to $100 billion, they went to a couple trillion, blah, 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 blah. You know, I hear that, you know, I get that, but and their margins are like 10 to 20%. I get that, or higher, but you know, but at the same time. And I know what you're saying, you know, Nvidia has way more growth than Meta and blah, 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 blah. I hear all that. But again, how many companies have 30% growth? Not many. In 10 years. They just don't. In 5 years, yes. And they probably will. They'll probably have, you know, 30, 40% growth in revenue. I bet you they will. Which is a lot. But it still doesn't come close to that $1 trillion market cap, is my point. Like, if you do the math on this, okay? Now, it may take me a while, but if you do, let's just say they're at $100 billion. So, no, let's say they're at 45, okay? And they're at we'll do a 900 billion valuation. $900 billion valuation. Okay. So, actually, no. We'll do better. So we'll do 500. And let's say they make 45 billion. So, or no, we'll do their earnings at 10. I have to do 500 divided by 10. It's idiot. That's still a 50 PE. If they are 10, the earnings ratio is a 10. That's still a 50 PE. That's not anything to be happy about. I'm just being honest. Like, it's a 50p. Okay, let's say they go down to 300. This is probably more reasonable. That's going to be a 30p. Now that's more reasonable. That would be a growth play. Good. You're gonna want to pay more money for growth. Okay, 300p with a 10 is good. But right now it's not there. At a 10, whatever, that's not there. I'm just being honest. Like, I think you people don't get it. Okay. This company isn't worth as much as you expect it to be. Okay? And maybe in the next 5 years it will be. I don't know. But it's not worth I'm just being honest. In the next 5 years it isn't going to be worth $1 trillion. I'm sorry to tell you. It just isn't. Even with a P of 50, it isn't worth that. And we can do a P of, we can say that you know, they hit it good. So that's a 38.5 PE if you round it. But to be exact, it's 38.46 PE if you don't round. Well, here you go. So it's 38.4615, whatever. So I'm going to cut out the 1 all the way back. I'm going to cut that out. So we're going to have a 38.46. So I'll round it up to a 38.5 PE. Which, in the growth sense of it, yes, that's great, but it's still, you know, you could still argue that that's kind of high. It's kind of high. In the next 10 years, if this thing grows 20%, that's possible. That is definitely possible. 30%, it's possible. I don't think it's going to happen, because you didn't. The thing that people didn't count in and aren't counting in is the geopolitical stuff. They're not counting that in. They're not putting it in the account. All they're counting in is growth. Growth, 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 growth. Growth, growth, growth. And maybe that's what they should do. But here's the problem. We don't live in a perfect world. Okay? So a company is not going to just consistently grow perfectly. It's just not going to happen. Okay? So when this company goes back down to $300, $250, I'm not expected to make any money on my shorts at this point, because this thing would have to come down a whole lot and very fast. Okay? And I don't think it's going to happen like that. If anything, it's going to come down gradually. It may still be fast, but that's what I would kind of need. But not just, I don't know when this this stock is going to come down. It doesn't seem like it wants to, because people are so happy, enjoying until they're not. Okay? And all these, hate to say this, but again, the Fed keeps warning, and forget about just NVIDIA. The Fed keeps warning to everyone. Okay? We still have not felt all the effects from the interest rates yet. Okay? The Fed isn't cutting. There's all these people are saying they're going to cut, they're going to cut, they're going to cut. There's still rumors that they may raise another quarter. I don't personally think they are, but they aren't cutting anytime soon. And when they do, that's going to be because they either hit the number that they were supposed to hit, and it's come down lower than that, so they just want to cut by 25 basis points. Or the market or the economy's just shit. So either way, that's not good. Maybe the first way is kind of good, but I don't expect it to happen like that. I think, this is the fastest we've raised interest rates. I don't know if it's fastest of all time, but I know it's the fastest in decades. If it even is that. I think it's the fastest of all time. But it might be the fastest in decades. So, and I'm not just talking about 3 or 4. Maybe 4, maybe 5. That's a lot of decades. I mean, look at the 1970s to 80s. And then the Black Swan event happened. 25. I don't think that's going to happen. But what I'm saying is you people. I'm not trying to be a dummy downer or whatever you want to call it. I'm just trying to be a realist. This market isn't just going to magically keep staying like this. Yay, 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 yay. It just doesn't happen. They can pump the market up all they want, all the time. But this market right now, student loans are starting to come in effect. Now, I've done the data, okay? Let's say 45% of the people are expected not to be able to pay. And there's around 30, I forget the data now. I think it's like 10% of the United States has student loans. Okay, so we'll say 4.5% of the United States, okay, will not be able to invest, okay, will be added on to having problems with student loans. I'm not saying it's a whole lot, but again, I'm going to say 10% of the population is going to be affected, though, because if that 4.5% of the people can't pay, well, it's also going to affect other people. It's not just going to affect those students, it's also going to affect their parents, if they're alive, maybe they aren't, or other family members. It's not just going to affect that person, so, financially. So, again, I'm not saying that we should really look at it and go, booyah. No, I don't think that's what it is. But, and I'm not totally saying we're going to go in recession. I just think that, I still think that we have too many problems, you know, even with China doing what it's doing, China still has a lot of problems. I mean, you know, they're in the risk of either going to a depression and not, even though I really think they already are one, but to classify it, they're on the risk of going into one, okay? And that's going to hurt the economy in a lot of ways. I'm not saying it's going to totally hurt America in the magnitude that I would be expecting, but it's still going to hurt the world economy in some aspects. So, you know, I still want to be hoopy dooey and doobie dooey, and that we passed this, we're done this. You know, I'm sorry to tell you this. I don't think people have priced in the rate pauses, not rate cuts. All these people are pricing cuts, and it's not happening. Even the Fed said this, okay? The Fed said, even though they tried to quickly go over it, they quickly went and then they just went over it. But they kind of said in 2024 we could have a recession without actually saying it, but they said it. It just was so not really there. A lot of people didn't really target it, but that's what they said. So, you know, could the market by the end of the year go to 5,000, the S&P? I don't know. Anything's possible, I guess. But that doesn't mean that it can't go back down to 380 or you know, it can't go back down to 3,600, 400, you know. I don't think a lot of people are realizing that you know, you're so hoopy dooey. Just keeps going up. I get why it does, but I don't know if people are. I'm not trying to scare you. I'm just saying that, like, you also should try to make sure that you're paying attention to what the other side is. Listen, I've seen a lot of bull cases, and right now they're actually right, but you know, we had a healthy pullback. Now it's coming back. You know, some people thought it was going to go lower, but it didn't. I think the height that we're probably going to get to is over 4,600, maybe 4,700, and then what I've been hearing is that we're going to go back way lower than what we made before. You know, and you know, just recently with the lows that we had at like 430, whatever. I don't know, and I worry that people are not realizing that it's not hoopy dooey. This isn't like that. It's upsetting to me that people are not realizing that we're not. That right now the economy looks great, but it's because the Fed put money into the system. The market has been pumped up by the system. The debt came in and was pumped up by the system. And those effects haven't caused yet. The interest rates haven't had the effects yet that it's supposed to have. And we're getting in this time where this is where the market gets ugly. Now, and right now it's looking okay. I mean, it's coming back up, but who knows? Maybe this was just a rally that's just healthy rally going up, and it's going to come right back down and pass the lower lows. That happens, you know, then, you know, the trend is going to be breaking soon. I don't know. I'm just saying my point of view on things. Doesn't mean they're correct. You know, I can't predict the market. You know, I'm just saying what I see from data from all over the place. It's not as glamorous as what you expected on the bulls. And I hate to tell you this, but all the bulls of NVIDIA they aren't pricing in the geopolitical problems. And maybe they shouldn't, but I'm just saying, like, if you're trading this thing or you're trading this thing for the next 5 years, okay, maybe they're okay. But if you're trying to get out of this in the next year or two, you're an idiot. There's a lot of bad shit happening soon with NVIDIA, possibly. You know, I'm just being honest. If they go after Taiwan, well, first of all, the stock market's going to go down, and second of all, NVIDIA is going to get crushed. End of story. I hate to tell you that, but that's just the truth. I'm not saying it's going to happen. I don't know if China's going to do that, because right now, I just don't think they will, because I know they're in a really bad economic place. And, you know, countries usually do that, where they just go, let's just distract ourselves and go to war. Boom. I think right now it's not going to be as common, because there's too much, it would cause too much problems, and China sees that. But I also think that China realizes that, you know, the government realizes we need something. And, you know, that's going to be an issue. So I want to be totally hooray, 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 market, hooray, hooray. A lot of shit could happen. There's a lot of tension right now, and it could emboil. So, you know, the government stopping NVIDIA's chips being put, I'm not saying it's maybe a whole lot, but that could be a common scene, and that could cause them to lose some revenue. I don't know, but, oh, and I bet you a lot of that revenue that came in, we're gonna have to see if that continues in Q4, or it just goes right back to where it was at $7 billion. Because if that's the case, and that tells me that all this was just because some companies gave them $1 billion here, $1 billion there, and another $1 billion there, just to pay them to buy chips. So that doesn't really tell me anything. I'm just being honest. And again, they don't have competition right now. Once they get competition in this field, and a lot more bigger competition, which they are, their margins are going to go down. They're going to not get as much revenue as they did before, and that's just what it's going to be. So it's not going to be as green as whatever. Now, maybe in the next 10 years, will this company be a $1 trillion company? Maybe. But why would you invest in it right now? Because that's what it is right now. That means your investment is going to be nothing. If you invested right now, or last month, or whatever. I mean, this is from people that are investors of NVIDIA telling you this. I'm not an investor. What I'm saying is, I've listened to people that are investors of NVIDIA, but they're really old investors. They've been investors years ago. And they're even saying, it's, you know, okay, it's lovely, it's great, but here's this, this is great, but here's this, you know. There's a lot of bull cases for it, and I understand why this thing rallied up, but at the same time, you know, this thing could also go down 90%. And if it does, just saying, you're gonna be screwed. Now, I'm not saying it will. You know, I do think it's gonna go down 50%, and that's 250, right around there. It's going to hurt a lot of people. Again, it's not all green, it's not all grand, it's not all beautiful. But that's NVIDIA. I'm going to stop talking about that, because that just is whatever. You know, interest rates, going back to that, on the entire broader market, interest rates are not really, you know, they can take 12, 18, 24 months to really affect the market. So I think some of them affected the market, but I don't think a whole lot of them did. Okay, so in that in mind, the earlier ones were starting to get to that 18-month place, or no, I think we're getting close to it. You know, this is like the run stretch: September, October, November, December. That's where we have a lot of craziness happen. So there could be a lot of stuff that happens in between here that we're just gonna have to wait and see. But I'm not expecting it, because but a lot of things could get nuts. Listen, I don't know. I don't know where the market's going. I have no clue where the market's going. I probably shouldn't even know where the market's going. I don't know. But at the end of the day, this is just nuts. Just what it is. Just nuts. Again, you have to also understand, there's not a lot of volatility. The volatility is going to start coming back in the market soon, because again, the summer months, a lot of people are on vacation and they're not really paying attention, and there's just a lot of things going on in the summer months that people are not really paying attention to, because they're on vacation, they're doing other things or whatever. But now these people are going to start coming back, and I'm not saying they're not going to keep raising the market. They probably will, but I think there's deals in the market, but there's also not. And I think the deals that are in the market, they're deals, but are they the right deals? That I don't know. I think CVS is a deal. I hate to tell you, I just do. Doesn't mean I don't expect it to go down to $40. Surely could. Anything's possible. But is it going to? Maybe. I mean, if the entire market craters, that thing could go up. But again, they're also more in the Dow, I think. I don't know if I'm right about that, but if they are, the Dow doesn't really follow the rest of the market, so it's kind of all over the place. And it looks like right now it's starting to go down again, so, or whatever it's doing. So it doesn't. The problem with the Dow that I don't like it, and you can't look at the Dow and go, that's no. You have to look at the S&P 500 and NASDAQ. Those are the two places that you kind of can look and see what's going on. But the Dow you can't look at, because here's the problem with the Dow. The Dow, whoever's leading for the day in their index, and there's only 30 stocks in it, first of all, I believe. That's what pushes the Dow. Doesn't matter if it's not a big stock, okay, in it. It could be the lowest stock. If it's up 5%, it's going to, 5%, it's going to push everything else up. So it's not structured like the S&P 500 and NASDAQ, because those two are structured very differently. They're structured where, now I know the NASDAQ has Microsoft ahead of Apple. I actually kind of agree with that, but that's something I'm kind of like, okay, whatever. But their percentages per their market cap, and they change, but that's where it is. So whatever you're worth for the entire broader market in that index, that's your percentage of that market. So if you push the market up, well, you're going to be pushing that thing up, right? But in the Dow, you could be the lowest guy and still push all of them up. That's why it's hard to look at them. Now, it's only 30 stocks, really, and a lot of them are big name guys, but I'm just saying, they could be a $10 billion company, and they're pushing them up, and that, the trillion-dollar company is down, but they're pushing it up because they have a bigger percentage. That's why they're not so great to look at. The Russell, a lot of it's small cap, so it's really, a lot of companies are not making any profit, a lot of them are not making any cash flow. There's no point of looking at them. I'm not saying you should invest in them, but what I'm saying is, like, on a per day basis, even though you probably really shouldn't be checking the market per day, but unless you're trading, but they're not really a guy to really look at. For me, I would more look at Dow. I'm sorry, the S&P 500 and the Nasdaq. That's where I would look. Okay, this was up, this was down. Okay, why? You know. But again, on a day-to-day basis, you really shouldn't be looking. Again, unless you're like me, where you're kind of trading monthly, kind of not trading whenever, whatever. It's a whatever thing. The Magnificent Seven, it's a bunch of stupidity. I don't think people realize that it's not going to be as grand in the future for the Magnificent Seven. They're going to come down. I mean, they may not come down a whole lot, but they're going to come down over the years. They're not going to just keep going. They're going to underperform. Maybe not all of them, but like Nvidia is, unless people are just a bunch of idiots, and maybe they are, I don't know. Microsoft, kind of is. Apple's going to kind of. Amazon, maybe, kind of is. I mean, I don't know. It may be different, but again, when people say it's different, it's probably not. I hate to float your boat, but it's probably not. When people say things are different, it's not. Okay? We've really been in a bull market since the 80s. Okay? And, I mean, yeah, I guess you can go all the way back to the Depression, but, like, what my point is that the market hasn't had, like, a run where we've just been down, but it still goes up, but it's not, the returns are not, like, you know, crazy. Hey, the S&P still has performed, if you go all the way back to, like, you know, all the way back in, like, like, in the 1930s and stuff, to today, you know, it's performed 9 to 10%, and with inflation, it's performed 6 to 7%. So it's still performed really well. My point is that the thing is that, you know, a lot of traders get used to things, and a lot of it doesn't stick. Like, 0 DTEs are not going to stick. That's not going to keep happening and keep happening and keep happening. At some point in the next whatever amount of years, that there is going to be something else. And it's not going to be 0 DTEs that are going to be pushing the market. Because years ago it was penny stocks where a lot of people were making... Well, my point is that where a lot of people are making money. Okay? And now it's 0 TTEs. Well, it was crypto, but really 0 TTEs it's still a thing. I don't know. It could get interesting. I have no clue. But again, we are coming in those months where whatever. If we don't really see a whole much downturn in September, October, I'm not really going to be looking for one totally until maybe next year. But if we start to go down again, and there is something that comes up, you know, that could be interesting. We have to understand, the reason why this year has been up is because most of the time when we're in a third term for a president, for whatever reason, the market's up. Okay? Because, well, first of all, especially if that president wants to get reelected, okay, they're going to do whatever they can to get that market up. If that's pumping the market in, even though it's a bad thing for the country, if it's doing this, doing that, doing this, so that's why the market's up. You know, you can look at it 10 different ways, that's why the market's up, as much as it is. And if you really count if you subtract all the Magnificent Seven's stupidity, the market's really only up 4%, you know? So, is that really great? Maybe from the lows to now, maybe, but I'm just being honest. Like, it's really only up 4% if you take out the Magnificent Seven. I'm not saying you should. I'm just saying in general. You know, that to me isn't, like, fantastic. Like, once the Magnificent Seven comes down, the question's going to be, where does that money go? Does it go into bonds? Does it go into the stock market? that's going to be, does it go into these lower, companies that haven't, or manufacturing, whatever, that have been doing terribly? You know, excuse me, that's going to be the question. And if that happens, then okay, then this market's, then okay, everything's going to probably be fine for the market. But I don't. That's where that's going to be the question, because the money right now is still in the Magnificent Seven, and at one point it was slowly coming out of it, but now it seems like it's just, some of it did. That's why the market pulled back and other reasons. But now, where does that money go? Where does the rest of that excess money go? That I just don't know. So that is something that we should be curious about, to look for, and hopefully we'll figure that out. But I don't know. I really haven't been paying attention in the last week or so, because I have some personal things I gotta get. Nothing bad. It's actually kind of good. That I'm trying to do. Trying to become a realtor. I have to study for a test. So, I was paying attention for a lot, but then just a lot of things were distracting me, and that's one of the things. And so I've been really mainly focusing on that, and one other thing that has nothing to do with finances. But so I haven't been totally focused on the market so much in the last week. Just a couple weeks ago, I was like really zoned in, but I really had to take a test. The one test I passed, the other test I failed, so I had to take that test again. So that's what I'm really zoned in on. So maybe next week I'll be more zoned in on the market, but that's just what I kind of grasped in the last couple of weeks on what's really going on. There's probably other stuff that I just totally missed, of course there is, that are big things, like regional banks. I've been hearing stuff about them, but they just seem like they're playing around. The Fed is just playing this game where, like, they want to lower it all the way down to 2% inflation, but they're really not, because they're giving so much money to these regional banks. It's like crazy. Or they're helping big banks. It's just really stupid. And I'll go into real estate market for a quick thing. Real estate market seems like, I think I'm wrong on it. Before I was saying we're going to really see a big crash. I think in certain areas we're going to see a big crashes, but not the entire broader market. Recently, I've looked at prices around where I live, and here in states above. It just seems like the prices are just continuing to go up, and they're actually like making newer highs. It's like boggles my mind, but it's because there's not enough supply. And when you don't have enough supply, this is what happens. So, the supply on the market sucks. And at the end of the day, that's why this market is where it's at. The real estate market. The supply sucks. People aren't willing to sell, and I don't blame them. Why would you sell a house that you got at 3% interest rate, and on top of that, your equity in the property probably has grown? Okay, and you're going to pay 7%, and again, on top of that, you're also going to have to pay a lot more. Yeah, no, I don't think that's really worth you doing. So that's why they're doing that. But I think what could crater it, which it's probably pretty obvious, but there is rumors that, like, people with mortgages are having a tougher time paying them. And if it's actually, no, that's not what it was. They're now bringing back this 0% down, or 1% down type thing. And, well, at least Zillow was, and I think other companies are doing it too, but I heard Zillow was. That could be a problem. So, yikes. and this is what I was worried about. If that comes into play, that could be a big problem. Not saying on the entire real estate market, it would have to be a big percentage of, but I think it's like 1% interest or something. But it's an adjustable rate. Like, I don't know. If that's really true and it does come back into play, that's going to get the market really ugly. Now, I don't know how that would have an effect on the broader market. I guess it could, because if those people can't do it, then they'll foreclose, and then they'll have to go to bankruptcy, and then they could, I don't know. I guess, I don't know, but it could get interesting, if you want me to be honest with you. It really could get interesting with how the market is, how the market isn't, the real estate market. Because again, like I keep saying, that market, oh my God. It just amazes me that, these houses just keep going up. It just, at least in the area that I'm at, it just keeps going up. I'm not saying all over the country it is totally, but again, it makes sense. I mean, again, the amount of, I think there's like 1.6 million realtors, but there's only, for every house that's on the market, there's two realtors and a half for each house on the market right now. That's not good for realtors, okay? That isn't good. That means that a lot of realtors aren't making money. Now, I'm not saying in a regular market that they would be anyway, but I'm just saying that that isn't totally good. So that is something that I would be looking at. If that mortgage, if people are not able to default on the mortgage, that could be a big problem, and that could send a lot of prices down. But as of right now, that probably won't be really affecting in the next couple of years unless something crazy happens. Like for instance, a lot of people are just go in unemployment. That could cause problems, but that means most of the market will be all crazy. But yeah, real estate, this is what I've been really hearing from really experts, not experts, but people that have been in the industry for many, many years, is that, well, here's the thing. The interest rates that you see are really not that high. Now, the problem is that with these interest rates, compared to the price of the property, that's why it's high. So these interest rates aren't really that high because, years ago, you could probably go 20 years ago, 30 years ago, these prices were at 15% of interest or 10% of interest for a mortgage. But again, those prices were really, really low. Like if you go into 2018, 19, I mean, that was probably the best, or 18, that was the best time to buy a house. Because first of all, the prices were okay, and the interest on them, especially in 2020, were just fantastic. I mean, you could buy a house probably for, an average house for $250, get it for 2% down, 2%, 3%, 3.5 to 4% interest. I mean, to me, you're sold. And that's why a lot of people aren't selling, because they would sell if the interest rates weren't that high. The problem is the interest rates are that high. That's what's keeping this market go up. I mean, that's really it. I mean, if it wasn't for that, this market would be going down. But that's the reason. So when these interest rates do start to go down, I still wouldn't expect these people to really sell their houses, the ones that are interested in doing that. But I'm just being honest, like these houses that, and I have seen them on Zillow. I'm just like, a couple of weeks ago they were under 900, and now because they were starting to go down, and like this is a bigger house that I know of, and now it's over $1 million in like a couple months. I mean, that's just nuts. I mean, it was already close to $1 million a couple months, like 6 months ago, and then it went down, and then all of a sudden it went boom up to over $1 million. It's like at an all-time high. Another house that I know, it was under 400,000 a couple weeks ago, and then all of a sudden it's above 400,000. Now I was thinking this house would have been able to, the house that I know that I'm speaking about, that house would have been able to sell for 400,000 anyway, but now it could be selling for 450. It's just nuts. This market's just kind of crazy, and the thing about it is it's going to really get interesting. So, but that's really it about real estate. But yeah, these markets have just been absolutely nuts. Absolutely nuts. But yeah, I don't know. We're gonna have to wait and see what happens. I know this might have been boring, but real estate. I've been hearing from people that are inside, a couple of people from inside the actual real estate market, like realtors and whatever. It's only been a couple of people, so I don't know for sure. But they've been saying it's really tough right now. Really is tough. Especially for mortgages. And I know someone that's a mortgage person, and he was telling me, yeah, I might actually get my realtor license. I guess just to try to maybe he could sell one house and still do mortgage on the side, do that on the side and do mortgage, and that's just nuts. But this is how this market is. I mean, it's crazy. What you have to understand, even with the 15% or 10% interest rates in the 1990s, let's just say, or whatever it was, 8%, those houses will probably say were probably 100,000, 150,000. Okay. Now those same houses are probably worth 400,000, like around 400,000, 450. That's nuts. That's not normal. And then the interest on top of that, you can't afford that. Like even the people that are renting, like I know people, I shouldn't say I know him personally, I don't, but I know this one guy, he has a lot of real estate and he's always hopping in and out of places. But he's on YouTube, his name is Ben Mallah, you should watch him. And recently he actually hasn't been talking about real estate, he's been talking about going on vacation. But he's really struggling because, the market isn't coming down. And there's always a deal. Like, the one thing he'll tell you is that there's always a deal out there. I'm not sponsored by him. I'm not sponsored by him at all. I'm just saying, if you want to go watch him, he's a really good guy to watch. But, and he wasn't, he'll tell you he wasn't very smart, that he was a little greedy because he should have been willing to refinance to 3.5 to 4% interest. Instead, now he has to pay 6-7% interest on his mortgages, and he's killing himself now because he's making half what he was making before, and he now has to sell properties because they're not making as much as he did before, and all this stuff. So he's in a tough situation. But again, there's always deals out there. It's just right now, the deals are just not there. And listen, I understand the people that are saying, oh, well, I paid interest rate years ago, it was at 10, 15%. I get that, but again, it wasn't, the houses weren't as expensive, plus the interest compared to those houses, if you actually do the math, the interest of the payment and the expense of the house, it's a lot more expensive today with the house and the interest than it was 30 years ago. Be different if it was the same amount, okay, fine, then you could argue that, but it isn't. That's why rents are so high. And that's the worry. That's another thing that's worrisome, is that people are starting to struggle on their rent payment. And once that happens, that's where things get crazy, because then the landlords of these properties could start selling the properties because they're not making any money, and that where maybe all the supply comes in. You know, I knew someone recently, now they kind of redid the house a little bit before they sold it, but they still got over what that neighborhood gets. They got like 270, and that's a townhouse apartment type thing, and they got like around 250, 280 in that range, and they got like 12,000 over asking. I think they got like 270, but yeah, it's just crazy. Absolutely crazy. But yeah, I mean, real estate, like I said, real estate right now is not, it's not in a good place. For people that don't have the great deals. I think if you're a new time buyer, again, I shouldn't be really giving advice because I don't know, I haven't really been in the industry, but in my opinion, now here it is. It would depend on the deal. It really would. It depends what you're looking for, what you're not looking for, what you're trying to look for. And again, it would depend on the deal. There's deals out there, there's not as many, but there's deals out there that are really good for you, that you're going to make money on. Okay? So, those deals you want to go find. It's just that there's a lot less of it. Just what it is. Just what it is. You gotta understand, there's only like 1 million houses on the market right now. Well, I guess there's less than that. I don't even know. So, you know, it's not a whole lot. I mean, it's a lot. You know, I mean, that's a lot of houses, but you know, it's not a whole lot when you have probably 8 million people looking for a house, and you know they're trying to buy one. You know, that's and interest rates are so high, you know, and so that's going to deter a lot of people. Plus, the prices of the houses are just crazy high because there's not that much supply. You know, that's what's just keeping this market going up, because people can't sell. There's no point of them to sell. They're able to pay their mortgage at a 3% interest. I mean, I know someone that was thinking about refinancing because, you know, they redid some of the house, and they're probably going to redo a little bit more in the near future, in the next probably 6 months to a year, maybe 2 years, start to do something also. But they redid, you know, a decent amount of stuff, and, you know, the house is probably worth more than what it was before. Of course it is. I mean, they put some stuff in the house. They redid the house, they redid the, you know, roof, the siding, and they got to fix a wall, but that's a whole other situation. But, you know, I was looking at their house, and their house is worth $350. I mean, I think they probably could get more, a little bit more, just because they redid some of the house, but it's not worth them to reassess. You know, it's not worth them to redo the house or reassess, because first of all, they're going to pay more in taxes, which is whatever. But what they're really going to pay more is interest if they refinance with the mortgage. There's no point of doing that. If you have a 5% mortgage, it's now at 7%. Why the hell would you do that? It'd be stupid, you know. Plus, they already have other loans they have to deal with, so yeah. That's why, again, I'm saying, you know, you probably shouldn't, if you're in a house right now, you know, if you find a deal, maybe what you could do is well, no, because then you'd be paying 7%. Never mind. I don't know, I mean, well, actually, no, maybe you wouldn't be, because I guess if let's say you own your house 80% outright, 80% of the house is yours. That's how much equity you have, and let's say it's worth $400,000. Yeah, you probably could take out a loan on your house, and that probably wouldn't cost you as much as 7%, because that would be, that'd be your money invested in the house. I don't think it would be 7% then, but you might be able to do that. If you found a deal, that's what you could do, so you could, whatever. But again, I don't know. Again, that's not financial advice. I've never done it, so I wouldn't know what to do, what not to do. You gotta go talk to people that know what the heck they're doing. But I'm just saying that, like, just trying to find a way for you guys to make more money, but that might be my only thinking, but I don't know. You'd have to look. You have to make sure that it would work. But yeah, that's why this market's just totally nuts right now. And, I don't know. But that's basically what else is it. And I do apologize for taking forever. There's been days where I could have done this. I just was lazy and didn't. Or I could have done the YouTube, but I just didn't, because those days I could have done other stuff and whatever. I just did the other stuff. But this video is a longer one, just because I really haven't been doing much. And again, this is part 2 of episode 13 of the Knowledgeable Podcast. Again, anything I say in this thing is not financial advice or whatever. It's just for entertainment purposes. Anyway, and don't go out and do whatever I say. And also, I'm not a financial advisor. Go down and like and subscribe and turn on your notifications so you can continue when I do post. You can get that notification that I posted, so you can watch it if you would like. And thank you for subscribing, all the people that are out there that do subscribe. Thank you. And we're actually almost at 30 subscribers, I saw. I don't really look at it as a big milestone, but I would like to thank you all for subscribing. I wasn't expecting to get that far already. I know that's not a big milestone, but it's something. I think when we get to 50, I may, do something, but nothing crazy. Just maybe, just thank you all. But thank you again, and this was part 2 of episode 13. Thank you, and have a nice day, and hopefully have a great weekend. And yep, bye-bye.